If you're wondering what's happening in Venezuela, watch this to the end. Venezuela has massive oil deposits, and it's one of the few countries that countries like China can rely upon that sit outside of the US influence. And it wasn't like sanctions weren't in place. The challenge was that it didn't work. Venezuela adapted. They sold oil in yuan instead of dollars. They actually bypassed the SWIFT system. They even leaned heavily into the BRICS-aligned trade routes. And as Venezuela steadily moved away from the US dollar system, and Iran having already done so, a growing share of China's oil supply now sits outside of US financial pressure. In plain terms, sanctions just don't bite like they used to. So Trump reminded everyone why Palantir trades at 250x earnings. In the dead of night, they arrested Maduro, fully dripped out in Nike, which, by the way, I think you should pay attention to that stock for volatility, and announced a US-backed transitional rule in Venezuela, framed as temporary pending a peaceful transition. That's where you can't really write this stuff. So what does this mean for markets? Oil and gas may see sharp swings in response to supply risk. Gold and defense often react to geopolitical stress. Latin America and emerging market ETFs could turn volatile, creating great tactical opportunities. Want to know more? Follow us as we unpack this as it unfolds to see how this impacts you as an investor.